Welcome back to another YouTube video. In today's video, we are going to talk about market structure. So, um, when you actually want to trade the forex market, you have a lot of concepts you need to understand before you be able to trade the forex market. And then, market structure is actually one of the key foundations to understand and to be able to actually trade in the market. And also, when it comes to the SMC way of trading, you really need to understand market structure, because market structure basically tells you if a market is bullish, a market is bearish, or a market is what just consolidates, it's not moving at all. So that's why market structure is very important, because as a trader, what do we speculate? We speculate either a market is going to be bullish, then we buy, or we speculate if the market is going to be bearish, and then we sell. So let's just dive in. So when it comes to the market structure, we have two main type of market structures. We have the trending market and the ranging market, also the consolidating market. Now, when it comes to the trending market, we have the bullish market, which is an uptrend market. That means, okay, so what are we expecting? Simply like this. We are just expecting the market to move up when we talk about a bullish market. A bullish market. So this is just a bullish market. This is not how it actually looks like. I'm just giving an example. Then when it comes to the bearish market, what are we saying? We are just talking about what the downtrend of the market. So what are we expecting? We are expecting the market to actually move down. Okay, sorry. My arrows are just good. So when you talk about the bearish market, this is what we are talking about. Okay, and then we have the consolidating market or the ranging market. Now with the ranging market, the market is neither going up nor down. It's just moving in a particular range. That is a high and low. Some people see support and resistance. So this is how a ranging market looks like. So the market is just moving up, down, up, down, up, down. Yeah. So it can move and eventually it can either break up or down. Yeah. So these are the three ways in which the market moves. Now let's talk about the bullish market. What does the bullish market really mean? What is printed? What does price show with the bullish market? Now when it comes to the bullish market, this price actually forms higher highs and higher lows for the bullish market. Let me explain better. So this is our market. This is our typical bullish market. This is how it looks like. Good. So what is price printing here? Price is just printing out higher highs. So at this place we have our first higher high, and then okay, what do we have here? We have our higher low, our higher low. So market prints out a first higher high, comes to form a low. Then what happens? Market breaks the previous higher high is printed. So this is the higher high we have here. So what does market do? Market breaks this higher high to give us a new higher high. So now what do we have? We have a new higher high here. So for the market to continue its bullishness, for the market to continue its uptrend, what does it need to do? It needs to break this particular higher high. So the market traces back, then again breaks our higher high. So for a bullish market, it continues that way till the market decides to change its direction. So what do we have here again? So we have our next higher high here, and then what do we have here? A break of structure to continue our uptrend. So we have a break of structure here to continue our uptrend. Now we also know that the market is also printing higher lows. So we have higher lows here and then higher lows here. With a bullish market, the higher highs represents resistance, and then the higher lows represent support. So there is a resistance. So for a new high to be formed, the resistance needs to be broken for a new high to be formed. So this is just a typical example of a bullish market. This is what a bullish market looks like. Now let's come to the bearish market. So let's talk about bearish market. When you talk about bearish markets, we are talking about the down movement or the downtrend of the market. So we are going to talk about something like this, where the market prints out lower lows and what lower highs. So we have our first lower low here. The market printed a lower high. What is it trying to print? A lower low, a lower high, a lower low, a lower high, and then a low. Good. So the same thing happens to this place. For a bearish market to continue, the market needs to break the lower lows. So what do we have here? So we have our lower low here. So let's say we have our lower low here. So we have our lower low, and then what do we have here? Sorry. We have our lower high, lower high. Good. So we have our lower low, lower high. Then what does the market do? The market breaks this lower low. So for a bearish market to continue, the market needs to break this lower low for the bearish market to continue. What does it do again? It prints another what? Lower low. Then comes up, pulls back, it will give us what? A lower high. So we have our lower high here. Then what does the market do again? For it to continue being bearish, we know that it needs to break what? Our lower low. Good. So this also continues and continues till the market decides to what? To change in a direction. So one thing you should also know here is that there is always a break of structure for what? A structure to be formed. I don't know if you get me. So what I actually mean is, for an uptrend market, okay, to continue its uptrend, to either change its trend, there's always going to be a break of structure in the market. So simply, when we are coming down here, for the market, as I was saying, for the market to change the direction, there's also going to be a break of structure. So this is just an example. So the market is in uptrend, going up, forming higher highs and higher lows, higher high, higher low, higher high, higher low, higher high. Then what happens? The market starts what? Changing its particular trend. Now what do we have here? We can see that after breaking this particular high, after breaking this particular high, we have a new higher high. The market does what? The market breaks it, which is what? At this particular place. The market breaks this particular high. Okay. And then what happens again? The market breaks this particular high. Now, before the market changed its what trend to become bearish, what did it do? It broke this particular what? Low, higher low. This then started forming what? A lower low or a downtrend. So whether the market is going to be bullish, going to be bearish, there's always going to be a break of structure. So let's just take some examples from the market and let's see what we are talking about. Okay. Good. Now let's talk about this structure. Now from what we illustrated, now you can see that this is a perfect bullish market. Why are we saying it's a perfect bullish market? What's the market doing? So let me take from this range, from this low, go to this particular high here. I'm going to concentrate on this. So there's a daily time frame. Now from this place, what do you see? You see the market forming what? Higher highs and what? Higher lows. So we have something like this. So you can see markets printing what? Higher highs and higher lows. So now for the market to continue its bullishness, what did we have? As I said, we always need a break of what? Structure. So what did we have here? We have the market what? Breaking this particular structure here to what? To form a new higher high. So we had our first higher high here. What did the market do? The market what? Broke that higher high to form a new one. Now for a new higher high, for our new higher high, which is what here to be formed, what did the market do? The market needed to what? To break this particular high, higher high for the new what higher high to be formed. So either the market is going to be bullish or bearish. The market always breaks structure. Now, market structure really is very important. Like you should just sit down to what to look at certain things you should practice. You should go back to price, check what price have been doing, and then what practice, 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 practice. So when you really understand what price is doing, when you really understand market structure, if you understand market structure, then you will really what know where the market is heading to. If you have no idea about market structure, you can easily tell yourself, oh, so since the market is now coming down from this place, what are you going to see? So let's say I know nothing about market structure. So since the market has started coming down, I'm expecting the market to come down. No, that's not how it is. So understanding market structure really is very important. It's very important. So you just need to take time, practice and practice and practice on all time frames, on all time frames. Now, one thing about the bullish markets, let me go into it. So to be able to know if the market is going to be bullish, that means the market must respect our higher low. What am I saying? So there was a higher high from here. Now, when the market came down to form a higher low, this is our first higher low. When the market came to form a higher low, what did you do? It formed another higher low, which is what higher than our previous higher low. So the market did not violate what our previous higher low. That means for a bullish market, we have higher high, higher low, higher high. Our higher low, our next higher low don't have to what be below this what higher low. So we are going to have something like this. This is what we have. Good. So our previous higher low was what was respected. The market did not what trade below our previous higher low. Now, when a market trades below our previous higher low, then we should be what actually be thinking of either the market is going to change the direction, or sometimes it breaks it and then continues being bullish. But then when you try to study the market with backtest, you would definitely get to understand all those movements in the market. Now, the market moves down to form a higher low. One thing, the market moves down to form a higher low. It either moves down to form a higher low to what? To come to test our what? Our previous higher high. To come to test our previous higher high. Or what does the market do? Maybe there was a very nice supply zone here in which the market left. The market comes what? To this supply zone to what? To test it before going. So it can be of this form. The market will just come to test our what? Our previous resistance or our previous higher high, or comes down to test a particular what? Supply zone. Okay, so this is going to be some example we are going to have here. So let's look at this place. So we can see from this place, what did the market do? The market came down, almost testing our what? Our higher high, then went up again, came down, didn't even come close to our what? Our higher high. Good. What did the market do? The market came into this zone, our demand zone here. There was a very nice demand zone here. Good. Came close to our demand zone here and then traded up. Now, what do we have again? So you can see there was a very nice demand zone here in which the market came to. Good. So it's either the market comes to test our previous higher high, or the market looks for a very nice zone to come to test before moving up. The market always finds reasons for its movements. The market always finds reasons for its movements. Good. Now let's talk about the bearish market. Let's talk about the bearish market. Okay. So let me use this place. So when we talk about bearish market, we are talking about what? Downtrend. We are talking about downtrend. And then from this place, you can see the market has been bearish from this side to, let me take this place. Good. The market has been bearish from this side to this side. Now, what does the market print when we are in the bearish market? The market prints lower lows and lower highs. So from this place, the market can form this lower low, form this lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay, good. Let me just take it here. Now, how was it formed? So we had our lower low here, our lower low, good. And then, so we have our first lower low here. Then we had our what? Our lower high here, our lower high. Good. So how was the next lower low formed? The market needed to break this lower low to form our next what? Lower high. So the market needed to break our lower low from our next lower high. And what happened? It came back right to what? Our previous lower low before it continued its movement. So you can see there was a continued break of structure to continue our bearish movement. So to continue our bearish movement, the market needed to break our lows, our lower lows, continue its movement. Now, if you can also see, you can see that something happened even though we're in bearish market. At a particular place, the market decides to change its direction. The market decided to change its direction. So how did that happen? So at this particular place, it happened at this particular place. Let's just look at it. Good. This is where there was a change in market structure, where the market decided to where the market decided to change from bearishness towards bullishness. Okay. Now, what were we having? We were having lower lows and lower highs, lower lows, lower highs in the market. Okay, let's continue. Lower lows and lower highs. Okay. Now, what happened here? The market failed to break our lower low. The market failed to break our lower low. So this was a lower low, this was a lower high. And then what did the market do? Instead of the market to continue, for the market to continue bearishness, we need to break this lower low to continue. But then the market did not break. It failed to break this lower low. What did it do? It broke this lower high. Came down here to form a higher low, then continued. So what did the market do? The market broke our lower high. Good. The market broke our lower high. What happened after that? We saw that there was a change in the market strength. The market started moving bullishly. So you can see how the market was so bullish after the change in the market strength. Now, talking about consolidating market, where we have the market just moving up and down, forming highs and lows. So this is a very nice example. So now at this particular place, you can see the market was just ranging, forming highs and lows. So the highs here, market was just forming highs, and then we had lows also here. Good. So the market was just moving in this particular range, so something like this. It was just moving like this until the market decided to break the structure, the ranging system. So this is what we had here. So basically, this ranging market, and then normally ranging markets are not very advisable to trade when it comes to the lower time frame. But most of the time, when you see a lower, a ranging market on a higher time frame, and then you move to the 15-minute time frame, yeah, it's a tradable market when on the 15 minutes, on the 1 hour. Yeah. So this is where we end our video on market structure. If you have any question, you can leave your comments in the comment section, and I'll answer your questions. Thank you very much. If you haven't subscribed, please subscribe for more videos. Thank you, and like.